Hi everybody, Alex Employer from Expert Forex, and in today's video I want to address an extremely serious topic, and that is the state of the Forex trading industry, which is approaching crisis point. Now, Expert Forex has always tried to be transparent in all its dealings with its clients, and this is a particularly serious video in that it could damage our business and our own trading severely. But it is important that you as a Forex trader or as a Forex robot trader understand what is currently happening in the industry. So let's move on. What has prompted this investigation is that, as you know, we trade over $1 million and we are battling to get the $1 million to be positive. We have incurred an almost 2% loss over the first 2 months of this year, and that is quite serious. We normally have much higher returns on our investments. So we got together with a lot of manual traders as well as Forex robot traders to address the situation of the Forex market as it is today. Because we have gone through all our EAs, we've gone through all our techniques to find out why we are not getting the returns that we're supposed to be getting. And the answer to this will be quite surprising, but it affects every single Forex trader and robot trader. So let's move on. What we have found is that there has been a severe drop in volatility in the Forex market. Now, what happens when there's a drop of volatility is that technical analysis starts failing, cause fundamental issues start taking over, and it doesn't have the normal freedom of buyers and sellers operating naturally in the market. It becomes a contrived and controlled market. Also, the cost structure of the market changes, where if you're paying 4 pips spread on a 140 pip volatility, that's only 2%, but if you're paying a 4% spread on a 40 pip volatility, you're paying 10%. Now, you might not find that a limitation to your trading, but certainly if you're trading large amounts over a long period of time, that kind of cost increase, which is about a 4 times cost increase, becomes quite a lot. So let's look at this volatility crisis that we're going through. Now, this on your chart, you can see a 5-year chart of the volatility of the euro. Now, 5 years ago, the euro was trading at 140 pips of volatility. And so what we're saying there is that 140 is the daily pip movement that the euro USD would experience. Now, it's gone from 140 pips down to 40 pips. Now, on the whole market volatility is at the lowest it's ever been. And this chart is typical of what's happening. The euro is the most traded currency, and you can see that what is happening is that it is being controlled and managed to not have a lot of volatility. Then if we look at the Oz, used to be 100 pips up there, now 40 pips. We look at the yen, 100 pips going on to 140 pips, now 40 pips. The New Zealand dollar, 100 pip volatility 5 years ago, now 40 pips, and at its lowest. The CAD, 140 going for 160, but now down to just over 40. Again, lowest it's ever been. And the franc, 140, 120 type of volatility 5 years ago, now 40, and also the lowest it's ever been. And the pound, strangely enough, has kept its volatility reasonably well. It used to be about 140, peaking at 200. That's the kind of volatility of the pound. It is now 90 pips. So not a massive change in the pound, but a massive change in the rest of the major traded currencies. So we've sat around and looked at some of the solutions to this challenge that we're facing, and one of the first things is to not use trending techniques, but to use low volatility and sideways market techniques where the price bounces back movement of the prices rather than breaking out, because low volatility means less opportunity to break out. Obviously, you need stricter risk control. Before we used to go for 100 pip deals. Now we're going for 40 pip deals. Stops and targets need to be very strict, and we need to start paying more attention to fundamental news, because technical analysis has reached a point where it's now almost starting to fail, and we need to now pay more attention to fundamental news on an ongoing basis. Also, there are still some volatile currencies in the market. We need to now start focusing on those volatile currencies, do the kind of trades that we used to do a few years ago. And then the other alternative is to look at other instruments. Now, we have started trading the indices, and they are performing pretty well. So that's a combination. The other thing that we will be doing in the next week is we'll be going through all of our EAs one by one and reviewing the type of settings required to deal with this low volatility market. So a total review of our EAs, not only from a setting point of view, but possibly also from a functional point of view. Now, just to give you an idea, the pound Oz has still got reasonable volatility. It was sitting at 200, peaks at over 250, but it is still running at about 150 pips a day. So that's a tradable instrument, and the stalwart that we've been trading consistently over the years, that's been giving us the best results in most of our trading techniques, has been the pound yen, which used to be 150, is now 120 or so. So no major change there. So here are some of our portfolios that we are running. We are running monitoring accounts on the indices, and they are performing pretty well. We've got almost 130% return over 200 days. So obviously the indices have a nice volatility about them and are producing really a good result. And this particular one is using the Make Money EA. That is a trending EA, and obviously the volatility of the indices is very good for that particular trending EA. If we look at all of our monitoring accounts, which consist only of Forex trading EAs, we still have a very nice positive result of 36%, but that is coming down at the moment, and that is the worry that we are currently having. If you are incurring losses over the last few weeks, don't despair, because everybody is incurring those losses. We are, and we are looking at solutions for that particular problem. But certainly I am trying to highlight the constraints of trading the Forex market at the moment, as it is at the lowest volatility it has ever been. It also means that if you're trying to, for instance, optimize an EA, you are using inappropriate history, because if you are optimizing using that history for that kind of volumes, you're not going to get really good results. So optimization, that's another downside of a drop in volatility, is the value of history becomes so much lower, because cost base that you're trading with down here and the volatility base that you are using is inappropriate to what went before. Now again, this is a bit of a bad news video. It is because Expert Forex believes in full disclosure. We are trading under a market that is very challenging at the moment. As you can see, our EAs have performed extremely well in the past, and what we are finding is that our clients are battling a bit over the last few weeks, and we are basically saying not only you are battling, we are also battling because of the market change. So consider the solutions that I have brought up. We will be reviewing our EAs and amending some of the settings that are currently available to our clients. And I would really like to hear your ideas about what you think about this severe drop in volatility in the forex trading market, and whether you see this as an opportunity or a threat, and possible solutions that you think would help in these market conditions. So from me, Alex Employee, cheerio.